Mr. Srini, you are a veteran of real estate investment industry. From all I know, across the real estate investment industry, I worked for so many funds, and I see you as one of the most celebrated investment manager or managing director. Want to understand a perspective from you that how complex and difficult is the investment decisions in a realty sector in India for you, because there are so many variables which are there already there, and there are so many new variables which keep coming. Even a good forecaster can't forecast many of these variables. So how determining project returns becomes that much more difficult. Is it really very complex and difficult the way it sounds to me?
Thank you for your kind words. It is complex. I was not from the real estate industry when I started this in about 2005, 2006. But I dealt with complex industries as a banker earlier. So that gives me a perspective that it's not just about the specifics of the project. You have to be far more aware of the overall environment that the business is actually surviving in. So whether it is politics, local politics, elections, change of a municipal commissioner which can delay approvals. At the end of the day, we are dealing with money, and money multiplies with time. So any loss of time, you actually lose the multiplier on money. So for us, the criticality is to, what I would always tell my team is to look at a particular project on a 360-degree basis. It's a very cliched term, but you have to not just look at what that particular project is about. The complexity, of course, increases depending upon whether it's a residential, office, retail. So each has its own unique challenges. And unless you have a full understanding of that, we are in a privileged position not to put money if we don't understand something. So it's better to give up a few opportunities if you don't understand it, and focus on the ones that you really understand it and take the time to understand it. And the second lesson that I've always learned is that don't get carried away by what you see in the newspapers. And more importantly, if too much of foreign capital is doing something, then you should be more cautious. Because India, as a country, can be very attractive in the short term, and a lot of money can come in. But in the long term, there are other risks, and real estate by definition is a risk business, and it's a long-term business. So as some of my team members will always say, it's like a movie. It's not very good as a still picture, but when you look at it as a movie, I think it looks great as a country.
Thanks. What do you see general outlook for real estate investment in India over the next 2 years? Do you see any major risk in the investment flows? We are seeing some healthy investment flows going in the real estate sector. Do you see the same trend will continue over the next 2 years, or do you expect some major changes over there?
I think the fact that a lot of money has come in and bought completed assets is good news. There's a lot of domestic money, NBFC money and bank money, which has gone into residential development, which is not having a good time at this point in time. I do see some challenges on those older loans, which has been bunched up in the books of non-bank finance companies in the last few years. And that is not going to be solvable in the short term. But the good news is when you think about it going forward, the new Real Estate Regulatory Act has essentially put a reset on the entire business dynamics. So newer developments, newer projects will actually be more successful over the next few years. And the second aspect of it is that domestic institutional capital, whether it is insurance companies, pension funds, globally these insurance companies and pension funds buy properties. They have not yet started buying properties. That maturity in the market will happen. And over the next 10 years, I see a very significant amount of domestic capital coming in. So I'm very positive on the sector per se. I'm particularly positive on office assets and industrial assets.
There has been a lot of distress also in the real estate sector. North is, all the major developers in North are under major distress. That also presents some opportunity for investment. You, as your fund, do you also looking at this as from specific focus and strategy perspective, or looking at this as a investment opportunity for you?
Yeah, so it comes back to the complexity that you talked about earlier. So India is not one market. The North Indian market behaves very differently from what happens in the South Indian market and what happens in, let's say, Mumbai. I'll give you a very small example. In Mumbai, you actually pay for floor rise. The higher you go, you pay a higher price. In Delhi, it's the other way around. The lower the floor, you pay a higher price. They don't want to live in the higher floors. You have to understand the nuances of each market. But coming back to your question on distress, yes, there is a fair amount of distress. We are looking at some of these distress situations. We have always been a distress player in our proprietary book in the past. And but distress is, it's in other parts of the world you call it vulture investing. So the vulture is a patient bird. You have to wait for the right opportunities. And I think whether we may have capital or not, we have a lot of patience. We will sit around and wait for the right ones.
In terms of the evaluation of the project, I think you have some part of internal team strength to deal with technical, financial, and legal scrutiny. What's your approach going forward? Do you want to depend on the external third-party consultants to do all these three levels of diligences for you, like we are doing fair amount of diligence for you? Or your long-term, you want to create your own internal teams to do this work?
Well, we don't have any plans of creating an internal team when sufficient talent in firms like yours is available. We will always have that skeletal team, essentially, so that my team understands the language that professional expertise like yours and your team can bring onto the table. But we would always rely upon specialists, firms like you, and there is a reason we want to do that. At the end of the day, we may invest in 5 or 7 projects in a period of 5 to 7 years. But you and your team are looking at probably 50 projects, not just for funds like us, but for others as well. So the collective experience that your team gains by looking at different situations, and that's what we are looking for when we seek advice from domain experts and professionals from your firm. And so we don't think we will do we can be masters of all of this. We understand money, we understand how money can be multiplied. I think there are other aspects of the business that you understand much better, and we will always be able to collaborate and work with outside advisors such as yourselves.